Welcome to the Passive Income Podcast. I'm your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button below. We just hit 1,200 subscribers today, so I'm super excited about that. And let's just keep growing the posse. Click that subscribe button. I'm super excited for today's episode. Joining me is Chris. You can find him on Twitter. I believe your Twitter handle is at options TDR Chris, options trader Chris. So,
Yes,
Chris, go ahead and give yourself an introduction.
sure. Well, Dave, thank you very much for having me. My name is Chris, and by day I actually work in IT, but as you've noticed on Twitter, I also do a lot of options trading. So I'm very glad to be here and talk a little bit about it. And congratulations to you on hitting that subscriber milestone.
Yeah, only 98,800 to go before I get that silver play button, right? Yeah, no, super appreciative of everyone who has been a guest, everyone who has subscribed, everyone who has watched, and all the views help add up. So I really appreciate everyone. Before we get into the options trading, obviously my audience is passive income, and we're really all a lot about dividends. And we you look at dividend paying companies, and I was thinking about this earlier. Something like a Coca-Cola. You look at that company, and like, okay, well that company's been around for 100 years. They're probably going to be around for another 100 years. They've been raising their dividend every year for 50 or 60 years or something. And so that's like a pretty safe bet, it's like, and that's kind of where my general audience is. So I'm just kind of curious, do you have like those types of companies in your portfolio that's just buy and hold forever, where it's like, yep, just keep giving me that dividend every quarter? Sorry about that. I just hit my microphone stand. Do you have that in your portfolio, those dividends and passive income, before we get into the options trading, like just some it, well, go ahead. I'm going to throw it back to you.
Sure. No, great question. So the short answer to the question is no. Um, I kind of view my investments in sort of two different buckets. I've got my bucket that is for retirement, where like 401ks, Roth IRAs, things like that are in, and I let the professionals manage that. So
Right.
I've given them my risk threshold and my objectives, and I let them pick the basket of stocks to put it in. And I imagine there probably are some dividend paying stocks in there, probably
Sure.
index funds and other things in there. But I try not to worry about that too much. Now, in the other bucket, which is more of the funds that I directly control, I do have a basket of stocks in there, and some of them are dividend paying stocks. So companies like Citibank, JP Morgan Chase, that do pay a pretty decent dividend, very large, stable companies. But that's not necessarily the reason why I have them in my portfolio. And we'll talk more about that later when we get into options.
Sure. Sure. Yeah. Awesome. So, yeah, that's great. Like, obviously, I'm in Canada. You're in the US, so we have similar things to the Roth and those types of retirement vehicles. Just basically uh, different names for more or less the same thing. And yeah, obviously, I've had tons of American guests on talking about their Roth and Roth IRAs, etc. And those definitely seem like something, like you said, just leave that up to someone else to sort of, okay, if they want to put Coca-Cola or McDonald's or whatever into that, good for you, right? Like,
Exactly. Well, those guys are kind of lucky because they've got a whole institution behind them doing
right.
all the research, looking at these different companies, making forecasts about where the company is going to go from a growth perspective and from a dividend paying perspective. Are there any either market challenges or macro challenges that this company is going to face that could potentially hinder it? And that's great. When you've got an army of people behind you helping you pick those stocks and those baskets of, to put your money into.
Right.
And I think I feel very comfortable, that they know what they're doing, and they are making the right decisions. And unfortunately, even the experts, get caught off a little flat-footed when you have,
Yep.
like last year. Obviously we entered the bear market. I don't think even, a lot of the very well-established financial services company were well prepared, for the big of hit that we took on that. When I look at what I do personally, I don't consider myself a stock expert. I do have a couple, a very small number of companies that I follow very closely, and try and understand their business, and the challenges that they're facing, and the things they're doing well. And I will focus on those, but I don't have the bandwidth to look at a broader array of companies like an institutional, money management firm would.
Right. And like you said, an army of people. So before, well, not before, we're going to start getting into the options trading here right shortly. And uh, one of my next upcoming guests is Leah, the trader, and obviously she is into options trading as well. And so I'm hoping between my conversation with you and with her, I might learn something because honestly, I know absolutely nothing about options trading. Like I, what's a call? What's a put? Talk to me like I'm five.
Yeah, options are interesting because they're a derivative of stocks. Without stocks, you wouldn't have stock options, obviously. And they provide a mechanism. I guess there's a couple different reasons to do options trading. A lot of people that have large, amounts of stock in their portfolio, either they're retired or they're nearing retirement, and they want to start to derive an additional stream of income off of those stocks. They can get into options trading and do that. Me personally, I'm doing it strictly from an income perspective. I want to use my options trading to generate an income stream for myself, build a second income for myself doing that. And
Right.
even within options trading, no matter your reason for doing it, just like with stocks, there's a very wide array of ways to do options trading. So, when I first started, it was very confusing to me, and I started with some of the basics, just simple calls and puts. I've advanced to a little bit more sophisticated trading here over the last couple of years as I've gotten more experience. But from my own perspective, I think that I've still got a lot to learn, and I'm going to look forward to watching that video as well and see what she has to share on it.
Yeah, exactly. So, okay, that's awesome. So already you're telling me that calls and puts are the basics. And I'm like, okay, well, break that down for me. Let's break down the basics first because again, my viewers, listeners, audience is really like going back to that Coca-Cola example. You look at a great company that's been paying a dividend for 50, 60 years or more, or increasing their dividends, and we're just like happy to invest in that company and sit back and say, okay, I did my due diligence, and now from now until the end of time, they're going to pay me a dividend, right?
Mhm.
And so options trading is obviously a little bit of a lot of a different animal. And so first, let's just break down the basics. Calls and puts, what are they?
Sure, sure. Well, I think the big thing to really just start with when you talk about options trading is you've got a stock that you're looking at, and you've got a perspective on where you think that stock price is going to go over a certain time horizon. And maybe it's a company that's very mature in a market that's starting on to decline. I'll use, this is kind of an older example, but look at Blockbuster in the late 90s. That
Right,
was a very large company, a very stable company, was generating a lot of revenue. But at some point in time, it became obvious that the market was changing rapidly. And
yeah,
so if you're a big holder of stock in a company like Blockbuster, you've got a couple choices. Either you can sell the stock and walk away from it, which I'm sure a lot of people did, or you can take advantage of having that stock and start to implement options to profit on the way down, as that stock starts to decline. Um, Dividend stocks are a great stock to talk about when you're doing options trading, because most companies that are actually paying a dividend are fairly mature companies. They're not your high growth companies. They're not, your Teslas, that are investing heavily in their growth and trying to grow market share and expanding to new markets, new products. They're usually more companies that have a very wide array of products, are in a very stable marketplace. Um, Typically, the stock price for companies like that doesn't change a whole lot. Whether you're talking about a Coca-Cola or a GM, any sort of major Fortune 500 company like that, their stock tends to stay within a certain range.
Right.
Now, you may have macro factors that will affect it, maybe drop it down a little bit, raise it up a little bit. But within that range, if you're holding a large basket of that stock, you may start to get tired of the fact that dollar amount isn't really increasing much.
Yeah,
Yes, it's
no
spitting
capital
out some dividends.
appreciation.
Yeah, no capital appreciation. So, that's a great stock to do options trading because you can say, I think the stock is going to stay within a certain range. And so I'm going to go ahead and sell a put, at a certain strike price, a certain price I think the stock is not going to get down to. And I'm going to go ahead and sell a call, at a certain price that I don't think the stock's going to get to up there either. And so, as long as that stock stays within the range that you think it is, now all of a sudden you're generating a new revenue stream by selling that put or selling the call. And just real quickly for people who aren't familiar with call or put, when you have a call option, basically you're given some. If you sell a call option, you're providing somebody the option to buy a stock from you at a certain price. So if I sell a call option for, let's say the stock right now is trading at $100, and I don't think it's going to hit 110, but I'll go ahead and sell a call option for the stock that I have to somebody with the strike price of 110. Excuse me. And if that stock never gets up to 110, I keep the premium when the option expires and walk away. If the stock does appreciate, hits that 110, that person then has the opportunity to buy that stock from me at 110. And puts the exact opposite. If you sell a put, you're giving somebody the option to sell you a stock at whatever that strike price is that you set for the put. And you can sell a put, you can sell a call, or you can buy a call, you can buy a put. And you're basically buying the option to do something or selling somebody else the option to do something.
So they're shorts and they're longs sort of idea.
Exactly, and most people that trade in stocks are familiar with selling a stock short or buying a stock, to hold long. Options are the same way, and if you sell a call or a put, you're selling that option short. And if you buy it, you're buying it long.
Interesting, interesting. Now, is there a minimum number of shares that you need to hold to be able to take advantage of options trading?
So that's a great question, and it really depends a lot on the particular option strategy you're going to do. And I'll start with a put. A put is a very great type of option to start with. And if you believe a stock is going to go down, you can. If you believe a stock's, let me start the other way. If you believe a stock's going up, you can sell a put for whatever strike price you don't think that stock is going to get down to. And the only requirement is that you have enough cash in your account to be able to buy that stock at that strike price if it does fall down and who you sold the option to exercises that option. Puts are something that even entry level traders, once you have a brokerage account and they open it up for options trading, doing cash secured put, selling a cash secured put, or if you own the stock, buying a put are two trades that are you're going to be allowed to do right out of the gate. Now with calls, if you each option contract is based on 100 shares of stock. So whether you're doing a call or a put, whether you're selling or buying it, if you do one option contract, that contract's actually for 100 shares of stock. So if you sell a call, you're going to need to have 100 shares of whatever stock that option is on in your account to be able to do that for most traders. Now, if you're a billionaire and you've got an options trading account, they're probably not going to require you to have that stock, in your account to trade. But for the rest of us, normal people, you can't sell calls unless you have in blocks of 100 the right number of shares in your account to cover that in case the stock shoots up. And calls are especially important for this, because if you sell a call and the stock greatly exceeds that, in order to cover that call position, if you don't have the stock, you're gonna have to buy it at whatever level that stock soared to, and then sell it, at the strike price for potentially a very large loss. So, an unsecured call is sort of like on the very experienced level of options trading. You've got to be at the highest level to do it. Personally, I'm at a level 3 in my brokerage account, which means I can't sell an unsecured call. And most people, probably 90% of people don't do that, and wouldn't even do it, even if you could, because of the risk level. Puts, though, even entry level traders, that's a great option to start playing around with.
Okay, cool. You brought up, you mentioned the word risk and loss. You mentioned the word risk twice and the word loss once in there. And so how risky is it, and how do you manage losses? Because in investing, we all lose. Whether, everybody that's ever invested has probably gambled on a penny stock and lost, right? It's just the way it is. So yeah, I guess just let's talk to sort of risk management and losses. And before we get into some, more of the idea, well, obviously the idea of investing is the wins and the long term wins, but I'm really curious about how you approach risk management with it, or within options trading, and managing those potential or realized losses.
Yeah, no, anytime you talk about options trading, you definitely have to talk about the risk, because unlike stocks, options trading carries with it a significantly higher level of risk. The rewards can be significantly higher, but as a result, the risk level is significantly higher. The first thing I got to say is that the money that I play with for options trading, um, it's not my mortgage payment money. It's not my car payment money. This is money that I have sitting out there that if I lost it all, and I hope that doesn't happen, but if I lost it all, it's not going to hurt me in the big picture. I'd probably cry, but it's not gonna hurt me in the big picture.
Right.
But even having said that, one of the things that I've learned over the last couple of years as I've done more and more options trading is how to minimize the risk. And there are certain strategies that you can do with your trading to, sort of cap the level of risk with any individual position that you open. Going back to the put, this is a great example. If I sell a put on a particular stock, and we'll use Citibank as an example.
Sure.
Banking stocks very volatile right now. Obviously, with First Republic going belly up over the weekend, and potential recession on the horizon. It's a great stock to talk about. I could sell. I think right now Citibank's trading, I want to say around 47, 48 a share, somewhere around there, and I expect that maybe it's already bottomed out. I don't think it's going to get much lower, so I can sell a put on it, that's maybe a month out for $40 a share, and I'll collect a premium by selling that put. And as long as the stock price never gets down to that dollar amount, in a month's time, that option will expire worthless. I keep the premium and everything's good. Now, let's just say the worst case scenario happens. Maybe, Russia drops a nuclear bomb on Ukraine, or,
Yikes.
something like that, something major, and the stock doesn't just go to 40, it drops down to 20 or 15. The economy's gone, belly up, and we're entering a Great Depression. I've sold a put option for $40 a share. If that stock drops down to 20, the person that I sold that option to can buy the stock at 20 and then sell it to me for 40. So they can
Yikes.
make a substantial amount of money, but I'm going to take a significant loss on it, because now I own stock at $40 a share that's only worth $20 a share in the open market. So, even with puts, there can be a lot of risk with it. Now, usually with your stocks like a Citibank or any of those Fortune 500 companies, typically those types of swings aren't going to happen too often, unless we're at the peak of a market. And at the end of 2022 or end of 2021, we were at the peak of the market, and a lot of those stocks did fall pretty substantially.
Yeah.
But even if you're at the top of a market, you can do things to cap your loss. And so, using the put example, I can sell a put at 40. I don't think the stock's ever going to get down there. So I feel comfortable opening it up at 40. I collect the premium for that. But simultaneously, I can buy a put at 35 or 38. The premium on it's going to cost me less than what I sold the $40 put for. So I still profit on the simultaneous purchase and sell there. But if for some reason the stock just falls through a hole, I'm covered. I can buy this, I can sell the stock for 38, and I'm only taking a $2 a share loss, versus when uncapped, taking a potentially $20 a share loss. So there are different ways that you can cover yourself like that.
Hmm.
Most of the trades that I do, I put some sort of collar on it like that, so that if things do get way out of control, my losses are capped at a certain dollar amount, certain risk level.
Okay, I'm going to go back to the Coca-Cola example and just buying 100 or 1,000 shares of Coca-Cola or McDonald's, like just these companies that have been around for 60, 80, 100 years. You buy them. Again, my audience, passive income posse, right? Like we're just sit back, you do your due diligence at the start, and you just every quarter, every 3 months, you just say, "Hey, thank you for paying me to not work for you." And it's obviously that's extremely passive income. I'm just kind of curious, do you still consider options trading as passive income, or is it a little more active? Like there's definitely more work involved in it. And so I guess just talk to that difference of like how passive do you feel that it is for income?
Sure. No, another great question, and I think it really depends on what kind of trading you're doing. If I own a big portfolio of stock and I'm simply selling options to generate more income, I can kind of sit back and let it go, on autopilot, and not have to do a whole lot with it. And that's a perfectly great way to generate additional income, off of stocks that I hold in my portfolio. The type of trading that I do is a little bit more risky. I do shorter term options, so options that are only a week or two out to expiration. And because the market is so volatile, I try to keep a close eye on it. And I actually didn't enter any trades today, but yesterday, when we started to have that big pullback, I actually had some great positions that I could go ahead and close out and cash in on in case the market rebounded today. I wanted to go ahead and capture that profit and not worry about it. I work from home, and I've got a monitor set up next to my work computer, so I can kind of keep an eye on it throughout the day.
Right.
And if something changes like that, I'm able to get in and do it. And I think by definition that's not so passive, but um, you can do options trading on a passive basis. Just to kind of give you a little background on how I got into options trading.
Yeah, please.
And I know a lot of the guests that you bring on talk about side incomes and other investment vehicles, and there are a wide range of things you can invest in
Sure.
to generate an income, and a lot of different opportunities for generating side income.
Yep.
And if you go back a couple years ago, pre-COVID, my goal was to generate a larger income with real estate. I had already built up real estate to a certain point, and I thought that I had an opportunity working with other investors to continue to build on that and grow on that. And interestingly enough, when COVID hit, it hit my portfolio especially hard because I was very focused on leisure, type travel, in terms of lodging here in the Tampa Bay area, and so that large income stream that I had coming, pretty much overnight, just gone and out the window. Not only did I lose my income stream, but also all of the deals that I had in the pipeline with other investors for doing additional, investments. That all evaporated pretty much overnight too. People lost their jobs, or they lost their income streams, and therefore needed to pull cash out. And what I thought was going to be a really great year for my real estate activities in 2020 just turned into a very horrendous year.
Right.
And
No
I
one saw that coming, right? Like we nobody saw that coming. So
No, no, and I know some people were probably affected more than others in terms of like job loss and so forth. But it really kind of forced me to take a step back and say, okay, you know, I had a great game plan, but now the market has shifted. Whether it's COVID or something else, the market shifted. I need to reevaluate it. And basically, what I decided to do at that time was, um, one was stabilize, everything that I had out there, and luckily, we converted some of our more travel type lodging into more long term rental type housing and stuff, and got everything generating, spinning off cash flow again, which made everybody happy.
Yeah.
And I basically at that point in time started to reflect and realized that what I was doing real estate wasn't very passive. I was spending a lot of time in it, a lot
Were
of
these
meetings.
short-term rentals like Airbnb or long-term rentals?
Yeah, Airbnb type stuff, short
Yeah,
term
so
rentals.
COVID hits, nobody's traveling, lockdown, nobody can go anywhere. Airbnb must have taken a huge hit in 2020 and 2021.
Yeah, and then even once things started to open up a little bit, the type of traveler that we were seeing was completely different. It just wasn't a great way to manage our real estate anymore. And while it was an Airbnb, even though I had management in place, and I had people doing, taking care of cleaning and stocking and that type of thing, I was still actively involved in managing those people.
Right.
And it was not passive at all. It was very hard to do around my work schedule. And so, after the dust settled from COVID, I basically took a step back and said, real estate's great for long term buy and hold,
Yep.
but what I wanted to do from an income standpoint, either I need to quit my job and do that full time, or I'm going to have to just change my strategy because I just did not have the time to do that. It was burning me out, and COVID forced me to reflect on it and realize that wasn't a great side income, for me. So that's when I started to look at options. I'd done a little bit of stock trading, never really did a whole lot with it, but my father, who's retired, was doing options trading, making a lot
Okay.
of money from options trading. I didn't know what options was. It was all voodoo gambling.
Yeah.
I had
Yeah.
no idea what it was and no interest in it.
Put it
Once
all on
co-
red. We're just going to Vegas and putting it all on red.
yeah, exactly. But he was making a lot of money from it. And he also, this is how I had gotten into real estate. He had also done a lot of real estate investing over time and done very well with it. And so, at this time I'm like, okay, well, maybe there's something going on there. Maybe there's something I need to focus on. And so,
Right.
with COVID, everybody being locked down and not being able to see people, spent a lot of time on the phone with my dad, and he taught me how to do options trading. Taught me all the Greeks, and how different things interacted and some of the basics. And so I started doing it. And by the end of 2020, I was doing pretty well with options trading. Now,
Yeah.
it kind of helped that everything was going up. The stocks were going up, everything was trending in one direction. But I'm like, okay, I can do this and do my job, and this will be a good side income for me. But and kind of the reason why I wanted to share all that is 2021, I started to get into bigger and bigger trades and taking bigger and bigger risks. And I got burned a couple times. And so, very quickly I learned that as easily as you can make a couple $1,000s, trading a couple options here and there, you can lose a couple $1,000s trading options here and
Yeah. So
there.
that goes right back to that risk management.
Absolutely. One of the things that's sort of changed for me in the last 2 years is that I've gotten better and better at using strategies that minimize the risk. I still have losses here and there, but they're smaller losses. I get out of things, much quicker. I roll things much quicker.
Right.
I'm much more um, I'm doing a much better job at being able to see where we've hit a point of resistance,
Sure.
or
Losing
hit a
200 doesn't hurt nearly as much as losing 2 grand, right?
Exactly. It doesn't. And I think that's just one of the things that anybody who's doing any sort of trading, the more you do it, the more time you spend with it, these are the things that you're going to learn.
Right. And obviously, I didn't mean to, I hope that didn't sound like a dig about like losing 2 grand or 200, but, because obviously you're obviously when you're winning too, you're making 200 or 2 grand or 5 grand or whatever you're making on these options trades, which is obviously incredible income. You mentioned your father and how your father taught you, and I thought like right away it clicked in my mind, like, that's amazing. because I've had a couple other guests too, also who have said, they've learned so much from their father, and I'm just thinking, how lucky were these people to have parents that knew about investing to begin with, right? Whether it's
Yeah.
real estate or stocks or options or anything. I've had, 3 or 4 guests now who have said how their father and their parents have just really set them on a path where there's so many other people in the world, the other 99% of people in the world that, we talk about schools not teaching finance, parents not knowing what to teach their children about finance. And so I guess maybe just talk to that a little bit about the influence of your father.
Yeah, no, I think I'm absolutely blessed that, I was raised in a family where I did get that sort of guidance and leadership from my dad, and learning how to invest at a very young age. Like I said, started with real estate, and then, eventually getting into stock and options. Um, it's, I know he enjoys, when he can continue to share that. I mean, my dad's retired. I'm much older now. It's not like, when he was teaching me how to ride a bike or those sorts of things. For him to be able to continue to share his knowledge with me, even at this age,
Yeah,
I think brings him a certain level of satisfaction. And,
sure.
for me, it's absolutely terrific because,
And
it's
it
for
is kind of like teaching you to ride a bike, though, right? Once you learn how to ride a bike, you know how to do it for the rest of your life.
exactly, absolutely. And I think, I look at some of my friends and, great parents raised in great households, but they don't necessarily, get that same, type of influence and same type of learning. And so, they don't, they're, if they've got a good job and they're setting money away from retirement, and, they're getting a 401k match, that's great.
Yeah,
But I think that if you've got an opportunity to generate additional streams of income while you're doing your career, while you're advancing in your career, even better. And,
yeah.
obviously you're doing that with your dividend investing, and, a lot of people are doing it as well. But, absolutely, I consider myself, extremely lucky that I had a father that was able to teach me that.
Yeah, awesome. That is, absolutely amazing. So, yeah, like I said, hats off to your father. Taught you to ride a bike, and you're still riding that bike today, basically
That's
now with
right.
these options trading strategies.
Absolutely.
I'm gonna quickly pull up your website here. I believe it's milliondollar earnings.com,
Yes.
and you have tons of information over here. Um, how to get started in options trading, the options wheel strategy, my top 5 mistakes to avoid.
Yeah, that wheel strategy, since you've got that pulled up,
Yeah.
again, if you own a big block of stock in one of those Fortune 500 companies, uh, you know, Coca-Cola or JP Morgan Chase, wheel strategy is a great strategy to use for generating extra income using options off of that stock.
Okay, well, again, talk to me like I'm 5. What is options wheel strategy?
Sure. So wheel strategy essentially is very basic in terms of you're either selling a call or selling a put, depending on where you're at in that wheel. And I'll give you a great example. I'm doing this today with JP Morgan Chase. I think it's kind of stuck in a range. I think we've gotten the worst of the volatility out of it. I don't think we're going to see it drop too far, but I also don't think we're going to see it climb too far through the rest of the year. So, basically you start off with, you sell a put. JP Morgan Chase, today, I forget where the stock's at. I think 148. I'm somewhere around there, but you sell a put on the stock at, say, 145. If the stock price never gets down to that amount, I keep the premium, and the next week I do the same thing, and you keep selling those puts until the stock actually drops down. And when it drops down, and the put exercises, now you own 100 shares of JP Morgan Chase at, whatever your strike price was, right? So I've made some money a couple weeks in a row because the stock never got that low, and I was selling a new put every week. But now I own the stock. So I can't sell puts anymore because I don't have enough cash left over to buy another 100 shares. But now that I own 100 shares of stock, I can look at the other direction and say, okay, the stock's trading at, this dollar amount. I don't think it's going to get up to this dollar amount. So I'm going to go ahead and sell a call at that high dollar amount. Now, if the stock never gets up to that, the option expires. I keep the premium, and the next week I do the same thing. If the stock does rise, worst case scenario, I keep the premium from the option. I sell the stock at the strike price, which was higher than what I bought it for. So I make a profit on the stock as well. And now I've replenished my account with the cash plus the premiums that I've collected over those weeks. And so I turn around and now I sell a put again. And basically, you just keep doing that wheel. You sell a put until you end up with the stock, and then you sell calls until you get rid of the stock. And when you've got a stock that's trading within a certain range, it's a very easy strategy for generating an income off of.
Oh, that's amazing. Yeah, that's amazing. Obviously, I will have the link in the description below to milliondollar earnings.com, and you can check that out there. Yeah, let's just keep going here. I also have your YouTube channel. I think I can just switch over to share this tab instead.
Yes, as you can probably tell, when I'm talking about something of interest to me, I can get pretty enthusiastic about it. And what I found with options trading, two things. One, there is a plethora of information out there on options trading, but
Right.
I would say that a big chunk of the material that I've come across isn't realistic when they talk about options trading. It's either ignoring the risks that you see with options trading or embellishing the profits that you can make off of options trading. If somebody tells you that they're trading options week in, week out, generating a large amount of income without ever taking a hit or without a down week, they're probably lying. And I've seen a lot of people out there that sell that they're making gobs and gobs of money, and then they turn around and they want to sell you a training program to teach you how to do the same thing. Well,
Right.
chances are they're making more money off selling that training than they actually are off the options, and that's why they're doing it.
Yeah.
I wanted to provide information out there, basically, providing a very sort of clear view on what options trading is, how you do it, what the risks are, without embellishing it. My goal is to make or to build up my options trading to the point where I'm generating $1 million a year in earnings. That's my goal.
Yep.
I'm not there yet. I've got a long ways to go. I'm slowly building up and heading in the right direction. But I figure as long as I'm learning and figuring these things out, why not capture that and share that with others that want to do the same thing?
Okay, I purposely waited to do this while we were recording. So for those of you watching, you see this right here? Just hover your mouse over this subscribe button right here and just click. That's all you got to do. It's that easy. And again, I will have this link in the description as well. Um, and I did want to talk about this video as well. I see Tim, who you can find on Twitter at Carbon Copy, 2Ks, Carbon and Copy.
Yeah, great discussion. Great gentleman. Tim's a prime example of somebody using options to generate additional income. While they're working full time doing something else. Like myself, he also works in the IT space. I think
Yeah.
he actually has a couple different side hustles besides option trading, but he's done dividend investing. He's been doing a good job building up his portfolio this year, and he's doing more and more options trading. He's doing quite well at it.
Yeah, Tim is he's been a guest here on the Passive Income podcast, and he's an incredible person, and I know he watches almost every one of these episodes. So shout out to you, Tim. Thanks for watching, and definitely go and check out the video over there on Chris's channel as well. Like I said, that link will also be in the description, and make sure you subscribe to that channel. And of course, as you can see on the ticker below, the Passive Income podcast, be sure to hit like and subscribe. Cool, man. I don't know. This might be a little bit shorter episode than others. We have talked a lot about a lot of different things. I've definitely learned some things. Like I said, I was going into this so unknowledgeable about options tradings and not even really knowing what a call and a put is. And I didn't know you could buy and sell both a call and a put. I honestly didn't know that.
No,
So I'm learning.
I'm very glad to be here talking with you because I think that kind of pulling the curtain back on options and demystifying it, you can start very small. If you're already trading in stocks, you're already investing in dividend stocks, you can do it as sort of like an add-on to what you're already doing to,
Right.
basically add on to that. And, I think it's great that we're talking, and I hope that, people are able to, use that information and potentially supercharge their trading as well.
Yeah, exactly. And I have seen that too on like through Twitter and the dividend and FinTwit uh communities. People, like you said, sort of get into the investing space with sort of the mindset of just dividend investing, but then they see this potential for options trading as well.
Yeah.
I think I said that correctly. Dividend investing and then advancing to options trading and just increasing your income, right?
That's what it's all about. Yeah. It's, I think a lot of people are out there looking for, how can I build up a side income? How can I build those additional income streams to help me out? I think there's a lot of great options out there for, not to play on words here, but there's a lot of great options out there for people to do that.
Right.
And options trading is just another one of those things. And for me personally, it's fit in very well with my lifestyle and my career. So, hopefully I can, continue to report success as I'm building that income stream.
Nice. I do have one more question for you before we sign off. But off the top, you kind of said we'll start with the basics of like calls and puts, and we talked kind of extensively about the basics. Sort of what's the next step or next level beyond just the basics?
Yeah, I think that once somebody's gotten comfortable with doing simple calls and simple puts, probably the next step in evolution there is probably going to be doing more of spreads. And that's where I talked about, when I'm selling a call and simultaneously buying a call at a different strike price, providing that collar. And the nice thing about doing that is that because my risk level is capped for that position, I can do more positions at the same time. I can invest a lot more at any given time without risking on any individual position. And getting back to risk mitigation, because that does provide that mitigation, because it does cap my risk. That's one of the things that I use quite a bit doing these spreads. Bear spreads if I think the stock's going to move up. Bull spreads if I sorry, bear spreads if I think the stock's going to move down, bull spreads if I think the stock's going to move up. But by limiting the amount of risk that I do in any individual position, it allows me to open up more positions at any given time. And if you look at my account right now, I've probably got, just in terms of spreads, I've probably got at least a couple dozen of those open on a variety of stocks and at a variety of expiration dates.
Wow, interesting. Very interesting. So you definitely taking it to that next level beyond just the simple calls and puts.
Yeah. And again, it depends on what your objectives with options trading are. If you're looking for something very passive, that you're not going to have to do a lot with, wheel strategy is great. Some simple spreads, bull spreads and bear spreads are going to be great. Once you become even more active and more experienced and more risk tolerant, then you can start doing things like skip strike butterflies, iron condors, where you're opening up, 3, 4 different positions simultaneously that kind of build this, you know, position together. All 4 different, options kind of build a more complex position
Can you
for you.
please say those two phrases one more time? What was the first phrase?
I think I said skip strike butterfly.
Skips, strike, butterfly.
Yeah, so there are a series of strategies that are called butterflies, and there are a series of strategies called condors, different variations of both of those, and then the skip strike butterfly is actually another version of the butterfly,
That sounds like a
but
football play to me. Like
it
skip, strike,
does, yeah,
butterfly, go long.
that's right. Yeah, I mean, the strategies can get very complex. I did a lot of skip strike butterflies towards the end of last year when I thought that JP Morgan Chase stock was kind of hitting sort of a peak. And so I did those, and they can be very profitable when you don't expect the stock to move up, or if it does, just very little bit.
Right.
In today's market, things are a lot more volatile, moving up and down a lot more. I wouldn't use that strategy for. I don't think there's any stocks out there I would use that strategy for right now.
I do have to write that down though, so that Leah thinks I'm smarter than I actually am when I talk to her in a few days. Skip, strike, butterfly,
Give
and
strike
then you
butterfly.
said condor. So what does that mean? What is condor?
Yeah, so condor and butterfly are very similar, but basically those are, you can use them in one of two ways. One is where I don't think a stock is going to move out of a certain range, and I can use a series of positions at the bottom of that range and a series of positions at the top of the range, and as long as that stock stays in the range, I profit from both ends of that position, or the opposite. And today probably would have been a good day to do the opposite, which is where I think the stock is not going to stay in that range. I think it's either going to go way high or way low, and as long as it finishes outside of that range, you can profit on it. But both the condor and the butterfly, the difference between the two is the amount of range that you have to profit in. But both of those strategies involve opening a spread on one end and a spread on the other end. So they take four different options together to create that butterfly or create that condor.
Okay. Yeah, so we've definitely got into the deep end now of, beyond the simple basics of calls and puts, and then into the spreads, and now it's sounding to me, again, starting out, 45 minutes ago, I knew less than nothing about options and trading and calls and puts. So, and now it really feels like we're getting into some more advanced type, well, terminology anyways, like strikes and butterflies and condors and
For
lions and
sure.
tigers and bears. Oh my.
Yeah. And the one thing that I can say about any strategy is make sure you understand the strategy. Make sure you understand what your total risk level is with that strategy
Right.
before you ever try it. The worst thing you want to do is get yourself into a position where you take a major loss because either you used it the wrong way, or you didn't understand what you were risking by opening that position.
Yeah. Yeah. Great advice. Not financial advice, obviously, but do your own due diligence and know what you're, hopefully you know what you're doing, right?
Yeah.
That's in any aspect of investing, even if it's just again going back to that Coca-Cola example. Coca-Cola is, you don't really need to do a lot of due diligence. It's Coca-Cola. It's been around for 100 years. It's going to be around for another 100, 200 years, and they're going to pay a dividend every 3 months, and every year they're going to raise it. But
Exactly. Makes
still,
it easy for you.
they make it easy. But at the same point, at the same time, you kind of have to know that, right? And definitely when you're getting into this type of options trading, you're doing a lot more uh, research on these companies, or you would have to be, right? You would have to know. I don't even know. What do you have to know? 52-week highs, 52-week lows, day range, like,
Yeah, it's interesting because I think that there are probably some basics that you should know. Really, any investing in stocks or options, you should understand the company that you're investing in. And there's a variety of things you can look at. You can look at moving averages. You can look at earnings. Price to earnings. Ratios. Some people trade options on a very long horizon, and they're going to look at things a little bit differently than somebody like myself that's trading on a much shorter horizon. I can honestly say that in the shorter horizon, I have found that stocks don't necessarily move much based on what's going on within the company. They're
right?
more likely to move on what's going on externally.
The
You know,
news.
unless there's an earnings date coming up or something like that.
Mhm.
Typically, company news doesn't move the stock very much as today the interest rate going up, a quarter point, or last week again, First Republic going belly up. Those two things move markets and move stock prices more than what's going on inside the company. And I'll say it another way: stock prices, I believe, are totally detached from the reality of what's going on in the business in most cases. I
Yeah.
think it's very irrational, and so I'm comfortable with that. And so the things that I'm looking at are more of the technical indicators, right? Where is the stock trading at based on, where I think it's going to go, or, is it starting to hit a resistance level, which might be an indicator that's going to start turn the other way, or vice versa. Those are more of the things that I'm looking at nowadays to determine what kinds of positions to open up. JP Morgan Chase, this is a stock that I do a lot of options investing in. I can say that I actually know a lot about the company, not just from my own research externally, but I actually worked for the company for about a dozen years. I know what their businesses are. I know what they're, doing and the things that they do,
Yeah.
depending on what the market swing is. But that's really not affecting the stock price too much. It's really all these external factors. I can throw all of my experience out the window and just focus on the technical indicators and do just fine with the short term horizon.
I'm curious, do you spend a lot of time looking at charts and like, the green candles and the red dips and whatnot, or
Um, I do to a certain extent. I am looking at what the support and resistance levels, tend to be. And again, moving averages is something that I look at a lot, to figure out where it's at. I don't get too much into the candles. I know that you can use a. I know some people use them for day trading and looking at, specifically minute to minute what they think is
yeah,
going to happen. I think that's very risky, and
yeah,
I don't have a high level of confidence that those candle indicators work as well as some people say. Even on a day-to-day basis, again, a stock can be doing something that may look like something on one of those candle indicators, and then something else happens that sends the whole market to a tailspin. And I think that's kind of where we're at today, is that the things that are driving these stock prices up and down, again, aren't the stock itself or the company that stock represents. It's everything else that's causing it to move up or down. And so having an understanding of the macro factors, at least for me so far this year, has paid off very well.
you mentioned moving average. So, do you put a lot of weight into like a 50-day moving average or a 200-day moving average? What are you looking for there?
I do. When that stock is really starting to move above that average, or the stock is really starting to move below that average, that can really start to indicate things that are going on. Um, I'll use Tesla as an example. That's a stock that I was a big fan of the entrepreneur Elon Musk, and so it was a stock that I thought was fun to play around with, and coming out of COVID, it was a stock that was on a rocket ship up, and so
Yeah,
I had a lot of
literally.
fun trading on it. And then the stock took a big hit at the end of last year. Musk got involved in Twitter, sent the Tesla stock in a downspin, and I became much more critical of the company and what was going on with the stock.
Right.
And this is a great example when you're starting to look at a long-term horizon. When that stock shot up to $200 a share at the beginning of the year, personally, I'm like, that's an absolutely ridiculous price based on where the company is going, as a company, and earnings and decreased margins and so on and so forth. And I was looking at people that were, hey, I bought two more shares of Tesla at $200 a day, yay! And I'm like, oh my God, you're not paying attention to what's going on behind the scenes. And
Right.
so, when I look at how far that stock's gotten up, I knew at some point in time it was going to go down, and
There
so
had to be a pullback from that
there had to
200.
be a pullback.
Yeah.
Or last week, stocks in general, we finished last week very close to all three major indexes being at their 1 year highs. And if you go back a year ago, we had just started that bear market and started that slide down from absolutely insane peaks that we reached in 2021.
Yeah.
And so, if you look at my YouTube short from yesterday, I do a Monday morning kind of pre-market. Here's what I think is going to happen for the week. One of the last things I said is, hey, we were hitting those 1 year highs. We're going to get a pullback soon. And sure enough, yesterday and today we're starting to see that. So, moving averages, yes, I take a close look at it, but you have to look at it in conjunction with everything else that's going on. And, no matter what the 200-day moving average said, we were still going to have an interest rate hike today. So how was the market going to react to that? Started to react kind of positively, and then, at the end of the day, really started to take a dive again. So, sometimes you really can't tell which way it's going to go. And
Right.
unfortunately, that's just the nature of, when you're doing stock trading or options trading on a short term horizon, you've got to accept that level of risk and, volatility.
Interesting side note before we sign off, Bank of Canada actually last time around did not raise the interest rates. So we held, and that was 2 or 3 months ago. And so they're probably due for another announcement again in another month or whenever it is. And I think they're gonna hold again without raising interest rates. So, like I said, interesting side note, a little bit different strategies between, the Bank of Canada and the Federal Reserve in the US. Um,
I'm kind
but
of curious. I haven't been watching Canada very closely here over the last year. Obviously in the U.S., inflation has been a big challenge. Seems to finally be going away.
oh,
Did
yeah.
you guys have that same level of inflation, or was it just not as severe?
Oh, no, it was worse. Oh, yeah, no, we had at least, the same level as the US inflation, if not more. It's and to this day, you go into the grocery store and you're just like, "I'm paying how much for apples? I'm paying how much for bread? I'm paying how much?" And it's like, yeah, so we had major inflation here as well. And like
Okay,
most things in Canada, like, obviously, whenever anything happens in the US, Canada is affected by it simply because of geography and the trading
close
relationship we
proximity.
have with the US, right? So,
Yeah. I hate to say this, but for everybody listening, inflation is coming down, and we're probably at the point where we're getting closer to that normal 2% a year inflation.
yeah,
Unfortunately, though, the price increases that we saw over the last year, they're not going to go away. What things cost today, that's what they're going to cost going forward. And
right.
unfortunately, hopefully wages catch up to it. Hopefully
Yeah.
incomes catch up to it. But it's something that I think a lot of people are really going to have to adjust to over the next several months.
Oh, awesome. Yeah, inflation, not fun. But anyways, with that said, before we sign off, any parting words?
I've watched many of your podcasts. I think that
Thank you.
the range of guests that you have, there's one thing in common both with you and your guests, and that you guys very much speak on the level. You're not fluffing anything up. You're not giving any BS.
Yeah.
90% of FinTwit is BS, and I think it's great to have people like you and some of your guests coming in and giving more of the honest, real world view on what they're doing and
Yeah.
how it all works. So keep up the good work.
Yeah, thank you. I appreciate that so much. And yeah, I definitely try to keep it very genuine on this on the passive income podcast. And like yourself, you have been very genuine this past geez, we're almost up to an hour already. And it's so amazing, like you said, all so many different guests with so many different strategies, so many different paths, so many different journeys. And I've just had so much fun talking to everyone and yeah, keeping it real basically. That's what I'm really trying to do is just keep it real.
Keep it real. Well, Dave, thank you
Awesome.
very much for having me on your show.
Yeah, with that said, thank you as well for spending an hour of your time with me. If you're still here nearly an hour later, please be sure to hit like and, of course, subscribe. I will have Chris's website and YouTube channel links in the comments below. Subscribe.